In an astonishing turn of events, Bitcoin mining companies have witnessed stock surges of up to 85% despite a struggling cryptocurrency market. This unexpected rally raises questions about the future of digital currencies and their mining operations. Here's the full breakdown of today's news. On May 3rd, 2026, the cryptocurrency landscape experienced a surprising shift. While Bitcoin's price remains down approximately 10% year to date, Bitcoin mining companies have reported remarkable stock gains. This phenomenon is particularly striking given the overall decline in cryptocurrency values, which has left many investors anxious about the future of digital assets. Companies like Hy-Vee Digital Technologies showcased a staggering 219% increase in revenue, attributed to their AI and high-performance computing initiatives that have optimized their mining processes. This surge comes despite a broader downturn in the cryptocurrency market, which has historically dictated the performance of related sectors. As of today, publicly traded Bitcoin miners are thriving, with stock increases ranging from 5% to 85%. Notably, American Bitcoin Corp, linked to Eric Trump and Donald Trump Jr., has seen its stock plummet by around 29% this year, highlighting the volatility within the sector and the potential pitfalls associated with high-profile affiliations. The stark contrast between Bitcoin's price stagnation and the mining stock's ascent presents a unique scenario. Analysts suggest that this divergence may indicate a fundamental shift in market dynamics, where the fortunes of mining operations are no longer closely tied to Bitcoin's price fluctuations. Several factors contribute to this change, including advancements in technology and efficiency that allow miners to operate profitably even in a bearish market. Additionally, the increasing integration of artificial intelligence into mining operations has opened new revenue streams, enhancing the resilience of these companies against price declines. The impact of this trend could be significant, potentially reshaping investment strategies within the cryptocurrency realm. Investors may start to view mining companies as independent entities capable of generating profits regardless of Bitcoin's performance. This shift in perception could lead to a reallocation of capital towards mining firms, further enhancing their market positions and stability. Looking ahead, the cryptocurrency market may witness a more pronounced separation between asset prices and the operational success of mining companies. As technology continues to evolve and regulatory landscapes adapt, the mining sector's adaptability could position it favorably for future growth. This ongoing transformation may redefine how investors approach the cryptocurrency market, emphasizing the importance of operational efficiency and technological innovation. The implications of today's events extend far beyond just mining company profits. Bitcoin has experienced a notable decline of 10% this year, leading many investors to express anxiety about their holdings. This downturn raises concerns about the overall health of the cryptocurrency market, which has seen significant volatility since its inception. Investors are increasingly wary as they reflect on the dramatic price swings that have characterized Bitcoin's history. However, the profitability of mining companies amidst these fluctuations suggests a potential shift in investment strategies. These companies are now employing advanced mining technologies, such as more efficient hardware and renewable energy sources, which indicates that even with a declining Bitcoin price, their operational efficiency could lead to sustainable revenue streams. This resilience highlights the adaptability of the mining sector in the face of market challenges. As miners optimize their operations, they can maintain profitability even in bearish conditions, thereby providing a buffer against market volatility. Furthermore, this situation underscores the growing importance of artificial intelligence and high-performance computing within the mining industry. These technologies can enhance mining efficiency and lower costs, making the sector more appealing to institutional investors who have previously viewed Bitcoin as too volatile. The ability of mining companies to maintain profitability could serve as a stabilizing force in an otherwise unpredictable market. Additionally, this resilience may prompt regulatory discussions surrounding the cryptocurrency landscape. Policymakers could find it necessary to reevaluate their stance on cryptocurrency regulations, especially as mining becomes an increasingly significant part of the financial ecosystem. The implications of these discussions could lead to more structured and potentially favorable regulatory frameworks, benefiting both miners and investors alike. The average person should care about this development, as it could signal a broader stabilization of the cryptocurrency market. Such stabilization may ultimately influence Bitcoin's future price trajectory and the investment opportunities available to everyday investors. Looking ahead, as mining technologies evolve and regulatory frameworks adapt, the cryptocurrency landscape is likely to undergo significant changes. These developments could establish a more mature market, positioning Bitcoin and other cryptocurrencies as viable investment options for a wider audience, fostering greater acceptance and integration into traditional financial systems. The current dynamics of the cryptocurrency market have been shaped by several factors over the past months and years. Bitcoin has experienced significant price fluctuations, stemming from increased regulatory scrutiny and market speculation. In early 2026, Bitcoin's price dropped sharply due to concerns over government regulations aimed at curbing cryptocurrency trading. This decline was exacerbated by reports of lawmakers in various countries considering legislation that would impose stricter compliance requirements on digital assets, creating uncertainty for investors. As governments worldwide grapple with the implications of digital currencies, these regulatory frameworks have begun to tighten, influencing investor sentiment and market stability. Simultaneously, Bitcoin mining companies began investing heavily in AI technologies to improve their operational efficiency. This strategic pivot was crucial, as it allowed miners to maintain profitability even when Bitcoin prices were falling. The landscape changed dramatically with the advent of high-performance computing capabilities, enabling miners to extract Bitcoin more efficiently than ever before. These developments have led to a unique separation between Bitcoin's price trajectory and the performance of mining stocks, a phenomenon not seen during previous market cycles. Historically, miners have closely followed Bitcoin's price fluctuations, making the current situation particularly noteworthy. The motivations behind these changes reflect the industry's adaptability in the face of challenges, setting the stage for potential new norms in how cryptocurrency is mined and valued. As Bitcoin continues to navigate complex regulatory landscapes and rapid technological advancements, the industry may witness a redefined relationship between mining profitability and market value. Looking ahead, the integration of AI in mining operations could pave the way for more sustainable practices, fostering resilience and efficiency in an ever-evolving market. This transformative approach may ultimately redefine the future of cryptocurrency mining. The future of Bitcoin mining and its associated stocks remains uncertain, with several potential scenarios unfolding in the wake of recent market developments. Bitcoin's price has experienced significant volatility, swinging dramatically in response to global economic factors and regulatory news. This volatility has raised concerns about the sustainability of mining operations, which rely heavily on consistent prices to remain profitable. One possibility is that the current trend of mining profitability continues, particularly as miners adopt more advanced technologies and energy-efficient practices. If this occurs, Bitcoin's price may stabilize, potentially attracting institutional investors who are reassured by the resilience demonstrated by mining companies. This influx of investment could not only bolster the entire cryptocurrency ecosystem, but also enhance the legitimacy of Bitcoin as a viable asset class in traditional finance. Conversely, if Bitcoin's price continues to struggle, miners may face increasing operational challenges. High energy costs, coupled with fluctuating market conditions, could force many miners to adapt their business strategies or risk insolvency. This scenario might lead to a wave of consolidation within the industry, as smaller miners may find it increasingly difficult to compete with larger, more efficient operations. Experts urge investors to monitor Bitcoin's price movements closely, along with any regulatory announcements that could significantly alter the market landscape. Furthermore, upcoming earnings reports from mining companies will provide critical insights into their operational health and future prospects. The pressing question remains, Can Bitcoin miners thrive independently of Bitcoin's price fluctuations? In the coming months, the intersection of mining profitability and Bitcoin's market performance will be pivotal. The ability of miners to innovate and adapt could ultimately shape the future trajectory of the cryptocurrency market, influencing both investor confidence and broader adoption. What do you think? Can Bitcoin miners thrive independently of Bitcoin's price? Share your predictions in the comments, and don't forget to subscribe for daily deep dives into the world's most pressing stories.